last thing you want to do is work 20 years to build a company up, get ready to exit. And on the exit, you lose half of your money. So not only do you lose your legacy because you're walking away from it, it's taxing. That's why some people won't exit their companies.
100%.
They want to retire, but it's like, if I sell this thing for, 5 times the valuation of the business, half of it is gone because of taxes.
Right.
I pay taxes throughout the entirety of owning the business. I'm about to exit. I'm ready for my last hoorah, and now I got to give up half of it.
All right, everybody. Welcome back to another episode of the 1% Podcast. I'm your host, Vin, and
I'm Shane.
And today we are joined by my main man, Hector. What's up, Hector?
Hey, how's it going?
Good, bro. Thanks for coming on the show.
Thank you guys for having me.
Yeah, we can't wait to jump into this with you. You know, we met a good while ago, funny enough, from being on a similar not being on a similar podcast, but being on a podcast and chatting in a mastermind group. And now here we are about a year later being friends, and awesome enough. We got you coming on our podcast now. So hopefully all the listeners are ready for one hell of a podcast, because my man Hector knows, I guess you'll see what he knows, but from what I've come to see, he knows everything about finance. He's on the private side of money. He's the man with the most info of things you should know, but you probably don't. Hector, tell him a little about yourself, your story, and what you got going on.
Yeah. I mean, first off, I really appreciate it. I consider myself a student. I'm still learning. I have conversations with people. I was like, oh, that's actually very interesting. I didn't know it. So I'm blessed to have access to the people that I do. I'm still always learning, still always willing to, be connected with people, because there's so many different ways to really do a deal in finance that somebody will always come up with a new way that you would have never imagined. Just recently, I got connected to a private family office, somebody who's trying to, let's say, exit their company. They're like, hey, you ever thought about doing ESOPs? And I'm not sure if people are familiar with like a 1031 exchange on the real estate side, where they save a lot of money on real estate. Same thing for like the business side for people who are exiting. I was like, what? That even exists? So, just very fortunate and blessed to meet the right people and do good things. And, I'm connected to private family offices. Kind of the best way to describe it is like Alex Hormozy. Everybody kind of knows who he is, within the acquisition space, usually worth 100 million or more. Those are your family offices, capital firms, hedge funds. And I've been blessed where I don't have to deal with a bunch of brokers in the middle. I'm usually dealing with managing partners, VPs, decision makers within those firms, so that way we can get deals done. And then, my passion is honestly our nonprofit, where we're helping, build people up. I feel like I'm very blessed to know the people that I know. And, I want to build up more people so we can all transact together and all do deals together through the relationships that I've been able to gather.
I love that, man. And can you tell me a little bit more about how you got started in this field specifically? Like what gets somebody who, well, actually, I don't know your full background, or maybe I do, but the guests don't. But what gets somebody really into the deeper side of finance? I mean, there's the 1% of the world that knows how the finance world really works. And then there's the 99% of the people that are going the safe route. They're having other people manage their money. They don't understand how to do deals, this, that. Like, what gets somebody into this? How did you start?
So, I mean, funny enough, I actually started in a call center. I grew up in a call center, I had a kid when I was 19 years old. So I had to make money, had to take care of my mom and my little brother. Got into a call center. I was making good money. I mean, making anywhere from $2,000 to $3,000 a week at 20 years old, was pretty good, Fast forward to like 27, it started off in like the vacation space. Kind of got tired of that. I got tired of making everybody else money. So really wanted to try out entrepreneurship. And one of the, I would say, industries I got into that really got me into this specific finance world, especially on the business side, was we opened up a call center where we were doing like hard money loans for businesses. They're called merchant cash advances. That's really what opened my eyes to how many people really needed access to funding and all the different products that were available. I knew it was necessary. Like, I'm from North Boston, not the greatest area. And we moved to Florida because my dad wanted a better opportunity for us, right? My dad didn't make it past his freshman year in high school, so he didn't really understand money, I mean, whatsoever. And I seen him truly, trying to hustle and do what he could to give us a better life. But sometimes you don't know what you don't know. Finance was honestly a really weak point in my family. We went from a Section 8 to homeowners to foreclosure within like a 4 or 5 year span, because even though my mom and dad became homeowners, they didn't still try to understand finances. So whenever they pulled equity out to unfortunately buy like furniture and stuff, that's not smart to do, right? Then pulled out another mortgage. Now a $700 mortgage turned into almost $2,500, and they barely could afford an $800 mortgage, right? So it really started, becoming really intriguing once I found out all these different types of financial products that were available. So 2017, I opened up that call center doing those merchant cash advances, but I hated it. It's just, think of money sharks for businesses, right? And like I said, I always say a lot of people know how to make money, but not everybody understands finance. That's why doctors, dentists, lawyers, they're really great at what they do, but they might not know how to manage or run their firm like a business because they don't understand the money side to it, right? And so absolutely love that we can help people with money, but it wasn't a good product. People defaulted on the loans all the time. Like, you ruin lives if you can't put people in the right product, and it ends up taking all of their money, and they're really working just to pay you off because they're not making any money. So then I started realizing, credit is important to be able to establish better products, because better products were out there to where, and now we build people's personal credit, build their business credit, put them in good financial products that are beneficial for their business, all the way up to when they're ready to exit their company and they want to get acquired, we could put them into a really good situation.
I mean, that's a pretty much a done for you system, which is great. I know a couple of people who specifically do one of those things, and the fact that you do all of them is great. I actually have never heard. So I guess I'm curious on that exact process here. Let's say that I'm interested in selling my company, and do you essentially coach me on getting my books and everything ready? And then once it's actually there, it's presentable, it looks good, you then market and promote my business to sell. And then once it is sold, you then handle the process essentially accordingly to help as much as we can tax wise. I probably is the best way of putting that phrase out there. Is understanding that correctly?
Close, right? So because I have personal relationships with family offices that are acquiring businesses, like, a lot of that stuff gets to get skipped, I don't have to necessarily look for someone. They're very bullish in business, especially now with the economy shifting. Things are turning back around for a lot of industries. Trucking is one. Trucking, honestly, felt bad for a lot of people in the trucking industry. I would say the last 3 to 4 years, they couldn't get capital. Even when they did, they were it was a disaster. Well, everything is turning around for that industry. My lenders are even like, Hector, we're lending to trucking again, which I was like, okay, great, this is awesome. But let's say a client comes and they're like, Hector, I'm ready to leave my company. Like, I'm just tired. I'm ready to sell. I have a really good relationship with the family offices that I work with. They'll look at it and say, hey, Hector, we need to do X, Y, and so they really literally just tell me, we need to do X, Y, and Z. And then they'll help me put a strategy in place for their clients. And then we can put them whatever situation. Every situation is very, very unique in the acquisition space. Like I said, there's so many different financial products that are out there. It would blow people's mind. Again, I'm still always learning, but we'll put a strategy in place to where, the last thing you want to do is work 20 years to build a company up, get ready to exit. And on the exit, you lose half of your money. So not only do you lose your legacy because you're walking away from it, and it's taxing. That's why some people won't exit their companies.
100%.
They want to retire, but it's like, if I sell this thing for, 5 times the evaluation of the business, half of it is gone because of taxes. Like,
right.
I paid taxes throughout the entirety of owning the business. I'm about to exit. I'm ready for my last hoorah, and I got to give up half of it. So we do it all, but I'm blessed with great relationships on the acquisition side to where we could put those plans in place where they don't have to go searching for other people. And I have, again, good relationships with CPAs and accountants where if they needed help with any of their books, I can put them into places where I trust.
So did you just slowly evolve from having this call center to offering, money loans, hard money loans, whatever the general concept was, to, I mean, now it seems like major private business funding, to even exiting options? Like, how did that part, like, those are extremely different.
Absolutely. Again, just trying your best to do good business. Now, every deal isn't going to be a good deal, right? But just being genuine and authentic with your clients and just trying to do right. Now, it wasn't all peaches and, rainbows and all sunny, right? A lot of losses in between, but because I just stayed genuine and authentic throughout the transaction, I gained a lot of relationships. I've gained most of my relationships through failed transactions, funny enough. But just doing right by people, and it came faster than, like, I would have never expected to have access to the relationships that I have. You know what I mean? But honestly, just, hey, listen, I want to do a deal with you. If it doesn't go through, just staying genuine and authentic to that relationship, they'll remember that. Don't nitpick. Oh, it's your fault we didn't make. Because, I mean, especially on exit deals, you can make a lot of money, but they're very, very difficult to walk through because you have to have the business owner who's ready to exit to accept certain conditions. The money's not always what they were expecting because they didn't manage their books correctly. So there's a lot that goes into it, and you have to be able to manage all of everyone's expectations because you don't want to burn any relationships.
I meant, like, specifically though, like, how did you go from, this extremity to call centering and hard money loans to where you are, now with, establishing well-maintained relationships, to exiting businesses and walking them through that, and even offer big private loans? Like, I feel like those are two completely different avenues. Was it because of the relationships that you built that you slowly started to transition from that into that?
Yeah, networking was huge in it, and I wasn't afraid to ask. Clients would just come up to me, "Hey, Hector, do you know someone that could do this?" And again, I'm just very honest. I'm like, "No, but I can ask." And then I would ask my network, and then sure enough, like, they would be like, "Hey, I can help." It happened today, actually. Then in our group, mastermind that we're in, I have a client who had money stuck with Merrill Lynch, and I needed help because he's bedridden. He can't get access. He needs to liquidate the stocks that he has there to pay for a lot of his medical bills. Well, I didn't have someone that could do that, but I was like, I can ask. And I asked my network, and now we hopped on the phone today, and she could do some amazing things. And she runs a whole department with Merrill Lynch. So just networking and being authentic. If you can't do something, don't lie to people saying that you could really do it. Say, no, I don't, but let me ask my network to see, and then you'll be surprised what certain people in your network will have access to.
That's a pretty interesting point, right? I think a lot of people, and I'm curious to hear your thoughts on this, because especially as entrepreneurs, right? We're primarily taught, if you want to be a successful entrepreneur, do the things, say yes to whatever it might be, and then figure it out later. And it's funny because that could also be the biggest thing that might get people saying, like, this guy's full of crap, because somebody say, "Oh, do you have a connection for this?" "Yeah, sure." And then you're going to go rushing to your network, seeing if you can find someone, not authentically knowing you have somebody. I mean, how have you always approached it? You said ask, but have you always approached it as that? Or have you at one point said, "Oh, I'll just say yes and figure it out"? Like, what was that mindset like for you for the most part?
No, I always stay true to that because, like, again, I don't come from money. I don't come from a lot of things. And I wouldn't want someone to do that to me, get my expectations. Like, "Oh, man, we're going to do this deal." Because it just recently happened to me. A client saying, "Hey, I need X, Y, and Z done. It has to be done by this date." So I pitched this scenario to one of my lenders. So I was able to bridge it together. And then when we get on the call, that's not what the situation was. And my lender and I told the guy, I was like, "Man, just be honest. That's not how you manage these relationships." Right. Now the lenders don't want anything and they're still cool with me because I've always been authentic in the relationship, but they don't even want to, it's a good deal. They don't want to do it because the client was lying about how the deal needed to be positioned. So I've always been like that because it doesn't hurt me to not, I didn't have the deal anyway. So why lie about it, and then ruin a possible opportunity? Just be authentic, be real. Like, no, I can't, or I don't know, maybe let me find out for you. I'll work on it. And then they get to see your work ethic within the deal, seeing that you fought for the deal. You didn't necessarily have the solution right away, but you went to bat for them and you went to fight for them. Even if the deal doesn't go through, you did your best. You know what I mean?
I can appreciate the authenticity. I mean, especially in today's day and age, people that are looking to get into what you do, specifically, I feel like to get out of business and to know that entire realm, normally people want to go to people that have done that before, right? Who have sold and exited businesses. But really what it comes down to is knowing relationships, how to properly promote it and get to the people who are going to be the best person to write you the biggest check. My question is, what advice outside of, being authenticity and networking can you give to somebody who is looking to get into prepping a business for sale, private financing, and essentially sticking through with the owner to sell? First off, I feel like we really are underplaying what you specifically do. Somebody who has a successful business that is experienced. I'm not saying for anybody who is listening that's part of my team that I'm going down that avenue, but have tested the waters of, selling an actual business. It's a very long, thorough, elongated process. I mean, we're talking about months to years for anywhere from 8, 9 to $10 million, not 10-figure valuations to exit.
There's acquisitions that you guys probably see on 10, 11, 12-figure acquisition deals. You know what I mean?
Right.
One of the biggest things I would tell anyone trying to get into the space is prep your clients for an exit from day one that you meet with them. And an exit doesn't necessarily mean selling your business. It could be, refinancing and restructuring the first position debt that you get to start the business. There's multiple exits that lenders are looking at, right? So let's say you get debt to start a business and you're getting private money to start that to start the business. An exit could be, hey, listen, especially let's say real estate. An exit could be, hey, we're going to put all the money into the deal. In 2 to 3 years, we're going to refi with that's an exit. You're going to refi from this debt. You're going to use another lender. So now their money's secured. You've essentially exited the deal. And now you got, who is it that does this a lot? Grant Cardone on his real estate deals. He does that a lot where he refinances the debt. That's technically an exit, right? So, but prepping your client from day one, what is the exit strategy? A lot of them will get offended. What do you mean? Why would I think of exiting? I'm just starting my relationship with you. Well, lenders, like if you look at pitch decks, they want to see some kind of exit strategy, and I would say not enough people focus on that in the beginning of the transactions. They wait till later on. That's the difference between an exit taking, I don't know, 3 to 4 months to 3 to 4 years is that's not prepped from the very beginning of the relationship.
I love it. I was about to ask you because and it's still pretty much a relevant question, but I was about to ask you, what do you think is some really big things that people, specifically entrepreneurs, don't know they should or could be doing? And obviously that's one big answer, but I know there's so much more too, and we're barely even scratching the surface. And I mean, realistically, so we'll probably need like a 20-hour podcast to even get some good info here, but some really deep stuff. But what would you say is some of the things that people don't know that they're always missing out on when they start a business? Is there an access to funding that they might be missing?
Yeah.
Is there structures? Like, give us some stuff for the new guys.
I would say people are scared to acquire debt for some reason. I don't know if it's mishandling their own funds in the past or seeing family members mishandle debt. But a lot of times when I get a client coming in and we're, talking about how to grow and scale their business, I was like, all right, cool. Like, what kind of debt do you have currently on your business? They're like, oh, no, I don't want no debt for my business. And I ask them why? Leverage is power. If you look, Apple's constantly, I get it. Apple has probably more cash flow than any of the business here in the country, but they're still constantly acquiring debt because it's leverage. there's only so much you could do with your own cash. And some people are like, oh, I just need 100K. I was like, you realize for you to do what you need to do with the 100,000, I mean, that's profit. That's not revenue. So if you need 100,000 to launch a project within your business, you need to realize you need to do like four or $500,000 in revenue to be able to take 100, and that's being, very moderate, to take that 100,000 in profit to implement the new project that you need, opposed to acquiring the debt. Now you instantly have access to it, because we all know in business, time is money. Also, how long is it going to take you to get that $500,000 to put the 100,000 into that project? Getting access to that 100,000 instantly to quickly implement, and now you have time to pay it back. Opposed to, let's say, we do 500K in revenue, take our 100,000 in profit, and it fails. Now what? Now we gotta do this whole sing and dance all over again and get another 500,000 in revenue to get another 100,000 in profit to try something else. Where in debt, they give you time to pay it back. There's so many different ways to shift debt, to refinance and then get better rates, where you at least have time to pay it back. Where while money's coming in, all right, let's try something different. And there's so many different banking relationships that you can gain access to get debt from everywhere. I mean, you can essentially get debt from all these other banks, especially on the business,
I'm just curious on what you would say about this. We had a podcast on the previous episode who he self-funded this company. He was a very successful person, and he self-funded a company for $1 million. I don't want to point out specifics, but and it took 20 months to essentially get to get presentable so that they could actually seek public funding. Is that the route that you would go? You would actually utilize that's what I was getting at. So how would you do something if you're promoting or if you're trying to build something? In this case, it was very deep coding, right? And we'll use this example as deep coding to build a robotics, right? So in order to actually have some sort of sophistication to say, this is what we're building, here's the prototype that we currently have. Now I'm seeking public funding to get $20-30 million. How would you go about that at that specific example?
Yeah, I mean, I would get, because let's say there's stages, right, to building the business. Let's say we're going to take the robotics, right? It's going to cost, I don't know, let's say like 50,000 in supplies to like get things going. Things happen in business. Like it's not a perfect road to success. Like something is always going to happen. If you use your own cash and something happens, like you're limited now. You've used what you had, opposed to like getting debt. And it doesn't have to be all, in this example, 1.2 at once. You know what I mean? Like do it in tranches, do it in certain rounds, like, and get it as you need it. Now, I would do like maybe a combination of the both, and keep your personal money as more of like an emergency for the business. Go acquire the debt, because let's just say you get debt of 100K, you're making your payments little by little. You use your cash to make those payments. And then let's say we go to a private lender. He sees that you have 1.2 in the bank. That's essentially collateral. They could lend against it. And again, like there's stock options. You could lend against your stock. You could pull like a line of credit against your stock. Let's say that's where a lot of your money's at. That's now you're making small payments. There's just so many different ways, but let's just take your example. I would go get debt first. Use your cash to pay off the debt and extend the time, because things can happen. And if you use your 1.2 and it fails, like, man, you got to go start all over and make all your cash again. Opposed to acquiring the debt, they'll give you time to pay that back. So I would do tranches and rounds of funding and acquiring debt. So that way, as things come up, like you don't feel so strapped, because it's a lot harder to like let go of that money when it's really what you have saving, opposed to it being, the bank's money. You might be like, for example, like, hey, I really need this, but it's my last money. So if I spend my cash on this and it don't work, it's going to hurt. Opposed to, you know what? I have extra money here. If it doesn't work, I'll have 10, 12 months to pay it off with the personal money I already have on the side. So that's how I would look at it. I would always go acquire the debt. Just be smart with it, but I would always go acquire the debt and have your money as an emergency to pay off the debt if needed.
Now, you've been on the other side of the spectrum too, so I'm just very curious, as I'm sure you actually have some tips. Let's say that I do take out, $100,000 that I don't have, but I took that out as a loan for my business. My business failed and I'm in a sticky situation. What would you do at that point too?
Bankruptcy.
Yeah, like I'm being serious. I'm being serious. So everyone, I'm just gonna say what it like. Everyone talks about Trump's bankruptcies. Oh, no, he's being smart. Like he's using like it's a game. Business is game. Finances, it's a game. It's 100% a game. Vin mentioned I know a lot of the private side of money. I know how banks make money. I know what they're doing. Right. I'm not the one that does it, but my relationships have back end banking experience. And I'm talking globally in Switzerland and all that stuff. File bankruptcy, and then you start all over again, right? Now, I'm not saying, obviously, like the goal isn't to file bankruptcy. The goal is to be successful. But I went to an event, a Grant Cardone event. Lloyd Blankenfield, he was the CEO of Goldman Sachs. He says one thing about our country is we reward risk takers. If anything happens and you filed the bankruptcy on the business, you could start over, right? There's ways to shift assets. There's a lot of different ways to maneuver. Learn the game to play it how everyone else is playing it to be successful. Don't complain, oh, this guy filed all these bankruptcies. No, just learn the game. And you could be just as successful, maybe not just as, but successful in your own, you know what I mean, in your own life at what's going on. So I would say, like, stop complaining about what these guys, the rules that these guys are playing it, and learn the rules so you can also play the game.
Spitting facts right here. We just became besties, Hector. sliding into your DMs after this podcast, bro.
Just be careful what he's sliding in with. Careful. So
Hey, man, I'm married with 4 kids, so there ain't no sliding going.
Took that way out of context.
Okay, Shane has 2 kids too. It'll be a good secret for both of you. So here's the question I got. What if, or actually this is a 2-parter. Can anyone get access to funding? And if they can't, what must they do to get access to funding?
So the answer is yes, right? There's certain situations that's needed to get access to the funding. I would say underwrite, like you want to look at underwriters as the people who are approving the financing that's going on. And when you present a file to an underwriter, you want to make sure that it's a good, clean file. So what I mean by that is, let's say you have great credit, making sure everything is structured correctly on the business. So when the underwriter gets it, because their job is to analyze the risk, right? Does this look like it's a risky business where if I put my stamp of approval, I don't have directors down my neck? Hey, why would you approve this client to get access to this capital if you think it wasn't going to work out? So credit is, and this is for like more of a startup business. Don't listen to all these people on Instagram saying that you don't need a PG nothing or you don't need good credit and you can get access to all this money. It's bullshit. Like, honestly, it is. Like, make sure your credit is fixed, especially in the beginning stages, so you can get access to capital, cheaper capital, right? So those 0% stuff, those aren't loans. Those are credit cards. Nobody's going to give you cash for 0%. That's not how it works. Even though they word it that way, that's not how it works. So if it's a beginning company, structure your credit to the point where you can get access to cheaper capital, because, I mean, you're starting your business. Like I said, you never know what's going to happen. You don't want high interest debt when you could be using that money to put into your company to help you grow and scale and implement certain things. If you're already, past that startup phase and you're in the green in the business, there's other capital that you can get access to as well, even if you have bad credit, right? So yes, anyone can get access to debt. It's just like, what debt is good for you in your certain situation. So if you're in a position where you don't want to be paying high interest on money, then structure your credit right. Make sure you're in the green, or make sure you're managing your books correctly so you don't look so high risk to an underwriter. Because I tell people this all the time. Like, I joke around with it with a couple people that I know. Think of an underwriter as like that 40, 50-year-old guy that's living in his mom's basement on the computer, right? Ones and zeros is all they know. They don't understand what's going on in the real world, or they don't care for it. When a file comes to that underwriter, if that underwriter is having a bad day, they could go ahead and deny your request for debt. A lot of people don't know this, but they can. If that file isn't given to them in a way that they feel comfortable, you want to make it to where even if they're having a bad day, this file is so clean, they're going to approve it.
Hmm.
So, just make sure everything is structured so that way if you run into an underwriter who's having a bad day, they're still approved because essentially that's what you need to grow your business,
Yeah, interesting. So your financial abilities fall into the hands of what I might call a basement dweller who may or may
Yeah.
not be in an emotional state that day.
Yeah, 1,000%. Like, there's so many people. Oh, and they give me this big old story on how they're gonna change the world, but their file is absolutely horrible. I'll give you an example. I had a client. He does about 11 or 12 million a year. He has it's like 8 or 9 auto parts stores in the Chicago area. I would say greater Chicago area. He even has one in Milwaukee and stuff. And banking goes, okay, so when I say days, it's banking days. There's typically 20 to 24 banking days in a month, right? He was in the red like 17 to 18 days a month, okay, in all his bank accounts. So he's like, Hector, can you take me to the? I was like, no, I'm not taking you anywhere. No one's going to approve this. You can't handle your own money. So if an underwriter were to see that file, absolutely not approving that. But I do 11 million in revenue. It doesn't matter. You can't manage your own money. Your bank account is always in the negative. On top of that, he had bad credit. So that's an ugly file. No one's going to approve that, no matter how much revenue you're making. So opposed to what everyone says online, especially on Instagram, they're the worst for this, or all social media platforms. Like, you want to have good credit, you want to manage your books correctly, you just want to have a clean business. It doesn't have to be a perfect business. Just operate a clean business, and don't listen to somebody who's on YouTube talking about I'm a non-certified CPA, but I know how to manage all that. Like, don't do that. Go to a real CPA, go to a real accountant. Now, their job's not to scale your business. Their job is just to keep your books clean. Because remember, you're presenting that file to underwriters. Just know who to go to for business advice on how to scale. Because a CPA's job is not to scale your business. It's just to keep your books clean.
All right, Hector. So I got one more question before we go to the final portion of the show, because we're almost out of time here. This is a really big question that I think a lot of people would love to know the answer to. So many times, new entrepreneurs, even veteran entrepreneurs, are so concerned with paying taxes that they go to zero out their business every single. They go and they're like, no taxes, no nothing. Are they still eligible to leverage debt? How much does zeroing out your business screw you over?
Yeah, it's one of the. So, like, if you want to play with the big boys, you gotta pay to play, right? Because if you're putting yourself in a position to where it looks like you're losing money every year, then, like, why am I giving you money? Like, you're not gonna be able to pay it back. You're losing money every year. You know what I mean?
Yeah.
So, like, now, is there unique situations where you're not paying a lot on taxes? Yes. Like, there's a lot of loans that, as long as you're in the green, you don't have to be millions of dollars in the green. You don't have to be sitting there doing 100%, year over year of what you did last. You don't know. Just be in the green. Show that you're a healthy business, right? But you gotta pay to play. So all these, you're going to pay zero. All right, cool. You know who pays zero in taxes and gets money back? Broke people, right? So do I want to give my money to somebody who doesn't know how to manage their money? No. So you really have to start thinking about it as, if you were your own client, would you give yourself money? Would you put your own money at risk for someone like yourself? And if not, then you need to start changing things around.
And my CPA, he literally told me, he's like, do you know the first line of success? You owe money to the IRS.
Absolutely.
It was that whole rhyme. I was like, you son of a bitch.
Now, like, and then, I have access to some very unique things. There's absolutely ways to position yourself. There's different structures. Like, I'll give somebody, people who are watching this, some homework that they could do. Look up unincorporated associations, right? And that's a different type of business structure, right? Look that up. You can operate at that capacity and it'll limit your tax liability, okay? You're still showing that you're a strong, positive company in the green, but your tax bill, your tax liability is going to be cut drastically. So understanding like the structure of your business will determine like how much you have to pay, but you got to pay to play.
I love that. Well, dude, this has been such an awesome episode. Like I said before, I don't want to even end this episode. I feel like we need like maybe 10 more parts to this so that we could get people even a fraction of the information you have in that head of yours.
We need to teach this in school, to be honest. Like
No,
financial,
they'll never do that.
they need to start teaching this in school. It's just
Yeah,
a trick.
that's what so that's what we want to do with our nonprofit, man. Is really our nonprofit is geared towards like transforming men, right? Financial literacy, everybody's like, oh, financial literacy, credit. No, it's not just credit. That's why if you notice a lot of your athletes, right? So athletes get access to millions of dollars probably faster than anyone else in this world.
Right.
You give a 19, 20-year-olds millions and millions of dollars, right? So quickly. But once they retire, they go broke.
Right.
Right. So it's not just getting access to the money, it's understanding finance, right? Understanding like certain investment deals are, understanding what's a good and bad investment, understanding that all investments are going to work, understanding, the higher the return, usually the higher risk in that investment. So do you want to be where your investment is secured? Okay, then don't expect 20, 30, 40, 50% on your money. Because most of the time that's a high risk investment, which means something can happen and you probably won't get any of your money back. So now I'll give you an example before we head out. Like I have access to some really unique investment opportunities where you're getting anywhere between 8 to 16% on your money year after year with some solar technology that is going to completely disrupt the industry, right? Okay, it's secured for 5 or 6 years. It's not going to be 70, 80, 90% on your money year over year. 8 to 16% is comfortable. It's 100% secured by the bank when you buy their bonds, but it's secured and you're always going to be getting your money, right? Opposed to, hey, listen, you're going to get 60% on your money, but we might lose it all. Like, I'm good. Like, I'm good. I'm not going to do that,
Yeah. With all investments, it's really determining, your risk tolerance that needs to be involved. Yep. And I would say for the riskier ones, high risk, high reward, at least my rule of thumb is determining, what their vision is for the next 12 to 60 months. And then if it's a high risk, high reward, use personal money. That's usually what I've gotten compared to if it's a lower risk, lower reward. That's something that I'd feel comfortable getting out a big loan, like even what you're mentioning, 8 to 16%. If I had to cross-reference that to a loan that I got through Hector for $250,000, $500,000, I'm still gaining interest on that, and it's a low risk. So now it's just offsetting my percentages and putting that money into wherever I want to. There's multiple ways of making money. It's just knowing people like Hector and asking the right question.
100%.
Yeah, and to piggyback off that, like, let's say, right, we're giving you an investment where you're making 16% on your money every year. And the money, like you were saying, like you take on debt. Let's say the debt's going to cost you 9% on your money. You're netting 7%, and it's not even your own personal money.
Exactly.
It's a win.
Right.
It's a win. You know what I mean? Stop sitting there trying to, hit a grand slam. Well, I want to pay like 1%, and I want to use that 1% debt to make 30% on the money. That's just unrealistic.
Right.
Yeah.
But see, people are so immature illiterate when it comes to finance because it wasn't taught in school, right? In school, we were trained and taught to be employees, to represent and to somebody else's company. Anyways, I can't wait to get to know you on a personal level as well. And I agree and piggyback off of Vin. Thank you so much for jumping on here. If we can at least have a part 2 series, I think that'd be beneficial to us and to the audience.
Yeah, absolutely. Let me know. I'm always, you already know, man. You hit me up.
Yeah,
I'm always down. So Shane, you guys let me know. And
we didn't wait. We didn't.
I wasn't an ender question. I was
okay.
You need to piggyback on number 2 here for sure.
Right, yeah, no, we'll get Hector on that, especially after we do some more things with him. But Hector, we do have 2 final questions for you before we do end out the episode today. So one of them is our big question. The name of our podcast is The 1%. Okay, this is actually going to be more funny talking to you because we believe that being a 1%er doesn't mean you have to be a billionaire. However, we see it as it's a way of life. It's how are you striving to be amazing in the top 1% in whatever it is that you're trying to achieve in this world? And so we always love to ask our guests, because we get really interesting answers, what is your version of a 1% lifestyle?
I mean, I would say doing what the other 99% aren't willing to do. I do have access to 1%ers. I'm friends with 1%ers. I'm not a 1%, like, I'm talking from a monetary standpoint, right? But I'm not a 1%er from a monetary standpoint. But I'm genuine and authentic, and I do what a lot of their other 1% friends and, associates aren't willing to do. And because of that, I have access to them and I have access to their resources. So, doing what, and honestly, like, think about it, they're 1%ers and they're still not willing to do certain things that I'm willing to do, right? With integrity and just, hey, listen, you know what? I'll try to connect you to so-and-so. I might not personally know them, but let me see what I could do. So I would just say, doing what, and being genuine. I know I say this a lot, but genuine and authentic, people will pick up on that. So I would say just being genuine and authentic and just doing what everybody else isn't willing to do, with integrity to achieve, a great lifestyle for you, your family, or, whoever you're taking care of.
I love it, man. And how can people get involved in your ecosystem? You mentioned you're wearing the shirt for the 800 Men Club, you mentioned, which is your charity organization. You have all these things you're doing to help out people with funding for their business, for their life, all these things. How can people get connected? What are some of the best ways for them to reach out or potentially utilize some of your services?
Yeah, I'm most active on Instagram. So at Hector Perdomo 87 is my Instagram. Our nonprofit, we're really now starting to get the social media active for it. That's at 700 Men Club. And then at 800 Men Club is our private membership. So basically the goal is get you at a 700 credit score. We got, teach you financial literacy, get things going. Once we're at the 800 credit score, we're all just investing into major projects together.
I love it, man. Well, that's phenomenal. You guys heard it here. Go check out what Hector's got going on. Based on this episode, I would probably guarantee, but I don't make guarantees. But even for this, I'll do it. I would guarantee you won't be disappointed because here's the thing. My friends, they're all 1%ers. I don't hang around with scrubs. So go check out what Hector's got going on. Go do his stuff, buy his things, do whatever. I don't know, whatever the man told you, go do it. No. Hector, thanks so much for joining us, everybody.
My pleasure, guys. Appreciate you guys having me.
Yeah, as you all know, like, follow, share, subscribe, drop a comment, let us know what you think, and we'll talk to you in the next episode. I'm your host, Vin, and
I'm Shane.
And that was Hector. See you, everybody.
Bye, guys.